Welcome back, everyone. Today we are going to talk about a stock that is not just another pharmaceutical company. It is becoming the leader of one of the biggest health trends in the world. I am talking about Eli Lilly. Just yesterday, this stock jumped more than 6% in a single day, and investors are asking, is this just the beginning of a much bigger rally? Stay with me until the end, because by the time we finish, you will know why Eli Lilly is being called the next trillion-dollar company and whether you should consider it for your portfolio. Company background. Eli Lilly is an American pharmaceutical giant, founded way back in 1876 in Indiana. Over the years, it has become one of the most respected names in medicine, with products like insulin for diabetes, Prozac for depression, and Cialis for men's health. But today, Eli Lilly's future is being defined by a completely new focus. Its biggest growth engine is now obesity and diabetes treatments. You may have heard of its two blockbuster drugs, Mounjaro and Zepbound. These drugs are changing the way doctors and patients approach weight management and blood sugar control. And here's the key point. These drugs are in direct competition with Novo Nordisk's famous products Ozempic and Wegovy. Together, these two companies are racing to dominate what analysts are calling a multi-trillion-dollar health opportunity. So, why did Eli Lilly surge recently? There are a few reasons. First, Wall Street analysts have been upgrading the stock and raising their price targets. They believe the company's growth is only accelerating. Second, demand for Mounjaro and Zepbound has been off the charts. Patients are lining up, doctors are prescribing at record levels, and pharmacies cannot even keep up with the demand. Third, the company is reporting strong results from new clinical trials. Every new positive result builds more investor confidence that Eli Lilly is not only leading today, but will continue to lead in the future. Put together, these factors explain why the stock jumped sharply and why many believe it still has room to grow. The business model. Let's break down how Eli Lilly makes money. The company earns revenue primarily by selling prescription drugs. Unlike many industries, pharmaceutical companies enjoy recurring revenues. Patients who start using a drug often need it for a long time, sometimes for life. That means consistent income. For Eli Lilly, the most important segment is diabetes and obesity. These two drugs, Mounjaro and Zepbound, are expected to bring in tens of billions of dollars every year. But Lilly is not only about diabetes. It also has a strong pipeline in cancer treatments, immunology, and even Alzheimer's disease. This diversification makes the company less risky compared to smaller biotech firms. Financial performance. Now let us talk numbers. Eli Lilly reported revenue of around $42 billion in fiscal year 2024. That's more than 25% growth compared to the previous year, and most of that growth came from obesity and diabetes drugs. The company's market capitalization is now close to $800 billion, putting it almost on par with Novo Nordisk. One important point is valuation. The price-to-earnings ratio for Eli Lilly is very high compared to the average company. Investors are already pricing in massive growth. That means if growth slows even slightly, the stock could face pressure. Still, Eli Lilly generates strong cash flows and invests heavily in research and development, more than $10 billion a year. That spending ensures it continues to innovate and maintain its leadership. Growth catalysts. What could drive the stock higher in the future? First, the global obesity epidemic. According to the World Health Organization, more than 1 billion people worldwide are overweight or obese. That's a massive potential customer base for drugs like Mounjaro and Zepbound. Second, new FDA approvals. These drugs are being tested for multiple conditions, not just weight loss. Every time regulators approve a new use case, sales can expand dramatically. Third, Alzheimer's treatment. Eli Lilly has a drug called donanemab under review. If approved, it could open up another huge revenue stream in the high unmet need Alzheimer's market. Fourth, global demand. Right now, supply is still catching up, but as manufacturing ramps up, Eli Lilly can serve more patients and grow sales even faster. Risks and challenges. Of course, no stock is risk-free. Competition is the first risk. Novo Nordisk is a strong rival, and other biotech companies are trying to enter the obesity drug market. Second, regulatory risk. Governments around the world are pushing back on high drug prices. Any new regulation could impact profitability. Third, safety concerns. Like all medicines, obesity drugs can have side effects. If patients or regulators raise concerns, adoption could slow. And finally, valuation risk. With the stock already priced for perfection, any earnings miss or slowdown in sales could trigger a correction. Investor outlook. So, what should investors expect? In the short term, the stock could be volatile, especially after such a strong one-day jump. Traders may take profits, and headlines could cause swings. But in the long term, if the obesity and diabetes market grows as expected, Eli Lilly could become a trillion-dollar company. Its leadership position, deep research pipeline, and strong brand reputation all make it a solid contender. For long-term investors who believe in the healthcare megatrend, Eli Lilly is one of the most promising names in the market today. Conclusion and engagement. To wrap it up, Eli Lilly is not just a pharmaceutical stock. It is leading a global megatrend in obesity and diabetes treatment. With blockbuster drugs already in high demand and more potential breakthroughs on the way, this company is transforming the future of healthcare. The question is, will Eli Lilly join the trillion-dollar club? What do you think? Share your thoughts in the comments. And if you enjoyed this analysis, make sure to like this video and subscribe to the channel for more in-depth stock breakdowns every week.